Hey guys, Eddie here from Delete Property. Today I thought I'd jump on video and give you a property market update for February 2019 and share my thoughts a little bit about what the different property markets are doing throughout Australia. So we're talking about the three main capital cities. So we've got Sydney, Melbourne, Brisbane, and then I'll be talking a little bit about smaller capital cities like Adelaide, Tasmania, and all the rest of it. Majority of the markets on the eastern side of Australia. So to cap it off, I guess I was reading a few different articles and looking at all the data and statistics from Sydney and Melbourne market over the past 12 to 24 months. And as of right now, basically Sydney and Melbourne markets, they've had declines a lot. And this is something that I really forecasted going back 3, 4, 5 years ago. Between the years of say 2013 to 2015, 16, the property markets within Sydney and Melbourne rose substantially. So majority of the properties rose between 80% to 100%. So majority of the areas within an hour or a few hours, even places like Newcastle, Wollongong of Sydney and all that kind of stuff. So within an hour or 2 hours of Sydney and Melbourne, majority of the fundamental properties around those kind of areas almost doubled in value over that 4-year period. So essentially went through a market cycle. And as that was happening, I knew for a fact that the properties have gone up quite substantial in a short amount of time. The previous time they done that was about 7 or 8 years before previous to that. And usually property markets will, on general, go up over say 3, 4, 5 years, substantially double in price, and then they'll flatten out, go a little bit backwards, pull back a little bit, and then go flat anywhere between 5 years to 10 years before they really start to go through a full market cycle again. So it's something, looking at Sydney and Melbourne property prices and how they've come down, anywhere between 6% to say 10 to 15%, depending on what article you look at and all the rest of it, over the last almost 2 years. It's something, that's been happening, and the media's put it out there in the market. So for Sydney and Melbourne, those are the kind of reasons I knew, I pretty much forecasted that was going to happen over the past 3 years. So that's some of the reasons why I was not buying in Sydney and Melbourne for investment property purposes. For building my own portfolio, substantially between the years of 2016 to 2019 right now, so that 2-3 year period, I was buying places that are more affordable, that had higher rental returns, such as like Brisbane, the Gold Coast, Adelaide, places like that. And only now that the property markets dropped down a little bit, and it's harder to get finance and you can pick up some bargains in certain areas, only now I'm starting to buy properties in like Sydney and all that. I've just recently bought a property in Sydney a week ago. So it's something that I'll monitor moving forward. But in terms of property market update for 2019, Sydney and Melbourne, it's very still, a place that I wouldn't be buying for investment purposes if you're looking to just get started. And of course, this depends on your situation. So if you're just starting right now and you wanted to get in the property market and you're buying your first 1 or 2 properties, if I was in that situation, probably wouldn't buy Sydney or Melbourne right now. I'd be looking at other places like Brisbane, the Gold Coast, and smaller, affordable capital cities that have higher rental returns. So my, forecast over 2019 for Sydney and Melbourne, for the 2 biggest capital cities in Australia, would be I still see declines between now, February 2019, probably to the end of the year. There's a lot of things going on, in terms of the Royal Commission, the banking finance industry. So it's harder to get harder to get finance essentially. And a lot of investors have felt the pinch. I've felt the pinch, but I'm still been able to get finance, still been able to basically build my portfolio. There's always ways to move forward. It just depends on how bad you want it. So yeah, Sydney, Melbourne, to break it down general, 2019, I still see it's going to drop in declines, depending how much. There's no crystal ball saying exactly how much, but from my opinion, I think I believe Sydney and Melbourne's probably going to, have fluctuations between now and the next year and a half before it really starts to actually, do anything substantial and look positive to actually start going up again. So I guess even for the next year and a half to sometimes even in 3 years, I really forecast Sydney and Melbourne to have fluctuations. And, they could go down. Fluctuations meaning, anywhere between 5 and 15%. So I don't expect, dropping 30%. I don't expect it jumping up, 40, 50, 60% like it did, within the last 4 or 5 years. I basically 10, 15%, say anywhere between 5 to 15% fluctuations. Could be going up, could be going down, but all in all, I don't expect Sydney and Melbourne to be doing a whole lot in terms of jumping up massively in value, because there's a lot of different factors which I won't go into right now, but rental yields, I guess supply and demand, which is in good favor, but in terms of, wage growth compared to the actual prices of Sydney and Melbourne, I don't actually see much happening for the next couple of years. So that's Sydney and Melbourne. Looking at other areas like Brisbane and the Gold Coast, I forecast, some growth I definitely forecast growth over the next, say 12 months of 2019. I expect it to there's a lot of investor interest and there's a lot of things happening within the Brisbane and the Gold Coast markets. So I expect it to perform relatively well. There's been some, statistics where it's come down 0.01%, which those kind of statistics, they don't really mean much if it's, that small percentages. But in the last, say, 12 to 18 months, Brisbane and the Gold Coast has definitely outperformed Sydney and Melbourne. So it's really, really good aspects if you're looking to buy in Brisbane or the Gold Coast within the next 6 to 12 months. Because I definitely forecast over the next 3 to 4 years, maybe even longer, there's a lot of growth to be had within the Brisbane and the Gold Coast markets, because for one, it's very affordable. For one reason, the rental returns are really, really high compared to the purchase price, and it's pretty much the 3rd biggest state or area within Australia. And the last time it actually went through a market cycle is, almost 8, 9, 10 years ago. So it's definitely due for some growth, and there's a lot of things that can be happening. And other areas, like Adelaide, Tasmania, I do expect them to perform relatively well over the next 12 months. I don't expect to see any declines or anything like that, as much as we've seen as Sydney and Melbourne. Tasmania's had some good growth over the last year or two. I definitely, from my opinion, I don't see it to continue going at the rate it has been. I think that it will continue to perform well, but if I were to pick any place to invest, it would probably be Brisbane and the Gold Coast for the next year or two, definitely before it start really jumping back in and catching those more affordable areas within Sydney and Melbourne again when it starts to really hit the bottom of the market, so we can catch them on the next upswing, basically. So that's a little bit of my thoughts. There's a lot more things to look at, data, statistics, and all that kind of stuff, but I just wanted to jump on here and share my thoughts as a property market update for February 2019. As always, it's not financial advice, just from my experience and my opinions on things. So thanks for watching, guys, and I look forward to chatting to you soon. Bye.